All right, guys, here are the 10 stocks that JP Morgan is telling us to load up on for some insane gains for next month. Um, these are pretty risky stocks, but this JP Morgan analyst thinks that in January, these stocks are going to have a pretty good comeback because most of these stocks are hit pretty hard from the past year. And basically, JP Morgan thinks that it's time for these stocks to see a pretty good increase in price. So the 10 stocks are, the first one is going to be New Fortress Energy, NFE. And as we could take a look at the price point, $25 per share. It's doing pretty well in the past week, but overall the past year down 56%. So pretty big decline as we can see here. All-time highs was around almost $60 per share. So it's sitting relatively half that. And this deals with clean and renewable energy. Next stock, same deal, Mastec. This stock has not been hit as hard. It's actually up in the past year, but it also deals with clean and renewable energy. All-time highs around $121 per share, and it has been slowly trending downwards the past 6 months, sitting at a price point of $92 per share. Overall, this company looks pretty good. It is a smaller cap, so it is going to be pretty risky though. Next stock is going to be Plug Power, another energy company, sitting at a price point of $29 per share. And it's been relatively pretty flat the past year. Had a huge spike in early January when all the EV stocks were having a giant run up. So that was at $73 per share. It's sitting pretty far down from its all-time highs. But it does look like it's time for a next big move upwards, and $29 per share is pretty sweet. We sold cash secured puts on this stock in the past, and it's done pretty well. But I think that just buying and holding shares could prove to be a pretty good investment. Next stock in our list can be Peloton. And if we take a look at Peloton stock, it's been hit pretty hard. $36 per share. All-time highs was all the way in late 2020, $162 per share. And now we take a look at this. In the past 5 years, ever since it IPO'd in early February 2020, it's only up 32%, which is pretty insane considering it was up almost 500% at its all-time highs. So this stock has definitely pulled back quite a bit, down 77% in the past year. And JP Morgan thinks that it's time for this stock to stop selling off and finally rebound. So yeah. And next stock is going to be Under Armour. Under Armour has been pretty hard as well. If we take a look at the stock, actually no, it's been pretty flat. But it did have a pretty nice run up in November, and is sitting $20.90 per share. Next stock is going to be Macy's, retail store, which has been hit pretty hard, I think. Yeah, in November it ran up all the way to $37 per share, and now it's sold off all the way to $25 per share. But Macy's, JP Morgan thinks that's a good buy, and it definitely could next month. Next stock is Gap, GPS. Let's take a look at the stock here, and it's been hit pretty hard in November, going from $24 per share all the way to $17. So it's definitely sold off quite a bit, considering in May it was at $35 per share. So it's sitting at relatively half of the all-time highs. So this could be a good dip buying opportunity to get into the stock. Next two stocks actually are going to be the vaccine stocks, Moderna as well as Novavax. And because of the new Omicron variant, these stocks they're going to be risky. Vaccine stocks, biotech is always going to be pretty risky. They're very volatile, but with the new variant and a lot of people getting the vaccine, with businesses being mandated to require employees to get the vaccinated, as well as the boosters, that's going to see a lot of business for these vaccine stocks. And that includes Novavax as well as Moderna. So Novavax, it's going to be risky, but it could pay off, as we can see. It's pretty volatile. Same deal with Moderna. Vaccine stock, people are getting vaccines. And as we can see here, the price swings very wildly. So only trade these stocks if you have a really tough stomach, because the price does move a lot. Next stock is going to be AMC. AMC, of course, is a retail favorite alongside GameStop. Overall, it's really been holding its price point, and I think that next, especially with Spider-Man doing pretty well being box offices, I think that AMC is going to see a really good run up, maybe next month, especially with the implied volatility increasing. A lot of people are buying into the stock. Volume is increasing as well. So we might see a huge movement either to the upside or downside. We really don't know. It's going to be risky. Next stock is going to be Pinterest, and that's our final and 10th stock here on this list. Pinterest sitting at a price point of $36 per share, down 48% on the past year. So it's been hit pretty hard considering it was at $86 per share early 2021. So yeah, this stock has been hit pretty hard. It could be a good buying opportunity. And there we have it, 10 stocks by JPMorgan that they think are at pretty good discounts, significant discounts, highlighted by the bank. And they really can possibly make you a lot of money if these stocks do rebound next month. So that's it. Thanks for watching.